Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. First of all, I want to thank you all for tuning into this video, and I want to give a warm welcome to all of my new copiers, and I've been very lucky to have lots of new copiers join recently. So I want to give you a warm welcome into the bees community. Also, if you could please like this video and subscribe to my channel, that will be really amazing. So today I'm going to be doing my normal video where I'm going to be explaining what happened in the markets last week, and I'm also going to be telling you how our portfolio fared overall. So as a general portfolio overview, we did really well last week, and we were actually up about 3.7% overall for the week, which was a really great and satisfying result. If we compare that to the other indices, the Nasdaq was up about 3.1% and the S&P 500 was up just over 2%. So overall, we outperformed the major indices, and that's been really good overall for our portfolio. Our year-to-date performance for 2021 is up over 143%. And this is a result that I'm really proud of so far. And I think that this is overall a tremendous result. However, I will not be resting on our laurels, and I will try to build that up as much as I can in the last couple of months of 2021, whilst also trying to protect our capital as much as possible. Our portfolio is also up for November over 2.7%. And I hope to continue to build that as well. Many of the companies in our portfolio delivered excellent Q3 earnings reports last week. And companies in our portfolio such as Mondelez as well as 𝗳𝗶𝗃𝗄𝗃, and also delivered an excellent report from Airbnb, were really good for our portfolio overall last week. And I wrote a summary of all of the earnings reports from last week on an eToro post last week, so please also check that out. It was also a good week for crypto, and we saw many of the cryptocurrencies in our portfolio do really well last week, such as Ethereum that continued to break its all-time highs, and also Binance Coin, which has gone from strength to strength and has increased in price a lot recently on the back of a lot of developments in terms of the Binance Smart Chain, and also a lot of influx into people buying new coins on the Binance exchange. However, there was some weakness in China, which I will talk about a little bit later, as they've had an increase in number of COVID cases, and also there's still some concerns around the property sector overall, which did kind of dampen our returns overall for last week. However, it was still a tremendous week for our portfolio. As we move on to the global market update, and I'm going to start off with the US. And as I mentioned at the start of this video, the S&P 500 and the Nasdaq both performed extremely well last week and continue to break all-time highs. And this was for a number of different reasons. And the first reason really was the fact that last week there was many Q3 earnings reports that were delivered to the market, and overall those were extremely positive. So the ones that did beat the overall estimates continued to surge in price. However, the ones that did not beat the consensus estimates, they suffered really harshly. And I think we are now in a market where there is high expectations for companies to beat their earnings. And when they don't, they get duly punished. I think the other reason as well for the fact that the markets went up was on Wednesday there was a Federal Reserve meeting, and what Jerome Powell said in that Federal Reserve meeting was that they plan to start some tapering in December, and they were going to start off quite moderately and start to taper bond purchases at about $15 billion. However, what they didn't say was anything past December time. So they left this up to the imagination, which is quite good because it gives them some leeway because if they don't see some key indicators in the economy that it's improving, they can then delay those tapering further. So this was generally seen as a positive sign overall in the market. Jerome Powell also post-meeting also mentioned that although inflation was higher than expected at the moment, that they expected it to moderate over time, and they would only consider raising interest rates if the market conditions and the labor conditions improved significantly over time. There was also some really positive economic data that was released from the US. And what this is showing is that towards the end of the summer, that the Delta variant cases started to drop off and things started to ease, which was very good overall for the US economy. And what we saw in the data was that the factory output actually increased by 0.2%. And also there was over 450,000 new jobs registered, as well as the unemployment rate going down to about 4.6%. So overall, very good data coming from the US. Things look positive. As we move on to Europe now, and the results were generally very positive, and the indices in Europe rallied. And this was again on the back of some very good Q3 earnings reports. There was also some really other good information from the UK, in which the Bank of England announced that it was going to keep its interest rates at record lows at 0.1%, and that they had considered raising them, and it was a close call. However, they have decided to keep those interest rates as they are for the time being, which was generally very positive for UK equities. Christine Lagarde, who is the head of the ECB, also echoed a very similar point to that of the UK. And she said that the European Union were very unlikely to raise interest rates in 2022. And she said that they would have to satisfy a lot of criteria, and there would have to be significantly improved economic data and labour information in order for them to consider raising those interest rates. So it is very unlikely that that's going to get raised even in 2022. However, there has continued to be supply chain bottleneck issues both in Europe and the rest of the world, which has negatively impacted the overall economy. And this was shown by data released from Europe this week, which showed that both Germany and France had both seen factory output decline. So Germany had seen a decline of about 1.1%, and France had seen a decline of 1.3%. And it is hoped that these supply chain issues will start to improve over the next couple of months, but this is affecting many companies right now who have a supply chain. As we move on to China now, and the stock market in China declined last week, and it is not as robust as the rest of the world right now. And that is down to a number of issues. One of those is that GDP growth is not as high as had been expected at the beginning of the year, and growth has started to curtail. And the second reason is that there's a lot of anxiety around the property sector in China and those Chinese property developers. And we all know about the Evergrande situation, where they are very debt-ridden and are struggling to pay the debts. And the third reason is that there has been a flare-up of new cases in China of COVID-19. And actually we are at a 3-month high of the number of cases in China. So this is a negatively affecting the economy, as it's making sure that they have increased restrictions on the day-to-day movement of Chinese people, which is weighing heavily on the economy. There was also another Chinese developer called the Cassia Group, which has run into more financial difficulties as well. And what they've decided to do is to sell 18 different of their projects for a total of 12.8 billion to try and ease some of those debt burden that they have. But this shows that there are more and more Chinese developers that are running into financial difficulties. I saw some data this week which said that over 7 out of 10 Chinese property development companies had seen steep declines in profitability in their last quarter earnings reports. And this shows a lot of the weakness and over leverage overall in the Chinese property market, and this seems to be deepening and getting worse. And the Premier 𝘃𝗶𝗱𝗲𝗃 has said that they are going to try, the Chinese government are going to try and support the property development sector as much as they can. So I think it's in the Chinese government's best interest to support the real estate market and make sure that there is no contagion or any more dominoes effects that affect other companies in that sector and in the China wider economy. There was also other data released from China last week that showed that the economy is starting to weaken, and there is a weakening in both manufacturing and the service sector. And the PMI reading last month for China was about 49.2, and this had decreased from the previous month in September at 49.6. And this shows a continual weakening, and a reading below 50 shows a contracting market overall. So I think with the supply chain pressures, also the increase in commodity prices and COVID overall, this is seeing some weakness overall in Chinese manufacturing, and also is spilling over into the service sector. As I mentioned in my previous videos, there's also been an energy shortage overall in China and the rest of the world, and also had mentioned that they had been trying to fire up as many coal mining facilities as possible to try to satisfy the energy demands of China. And there was also a pact by many of the provinces in China this week that they were going to try and reduce the costs overall of coal in order to be able to make energy more affordable, because obviously the rates of energy have gone up quite significantly. So this is really a pledge from the Chinese government to reduce those overall energy costs. As we move on to our top 3 performing stocks of last week, and in number 1 was Airbnb. And this is a stock that is doing extremely well in our portfolio and is up over 50%. But for the week, it is up over 18.1%. And the reason why it's up is it had a very spectacular Q3 earnings report, which was released last week. And this showed that people were continuing to book more trips with Airbnb, and that the network was growing from strength to strength. And importantly, people are starting to travel again after the vaccination programs around the world. So it was a very positive week overall for Airbnb. The second best performing stock in our portfolio was a company called Micro Focus, which is a UK tech company which is on the UK stock exchange, and that was up about 15.3%. And that was on the back of a previous couple of bad weeks overall for Micro Focus. So it is a very welcome bounce back overall for the stock. The third best performing stock in our portfolio last week was Group 1 Automotive, or also known as GPI. And they were up about 9.5% last week. And they have been a continued beneficiary of increased inflation rates over the last year, and also a lack of supply of semiconductor chips, which have really hurt new auto manufacturing, but it's been very good for the sales and the increase in prices of second-hand cars. So this has been a major tailwind for Group 1 Automotive, and it's a stock that I am continually bullish on. As we move on to crypto now, and it is a subject that is very hot at the moment in the overall press, and it's something that is being talked about a lot. And that is because crypto prices are doing extremely well. So if we start off with Bitcoin, Bitcoin has done a 4th consecutive week over 60,000. It had a nice little surge yesterday and is now kind of hovering between the 63,000 mark and the 64,000 mark, and we are seeing a lot of upward momentum and some really positive on-chain metrics. So this is looking really good. We also saw the approval last week of an Australian ETF, and what was really important about that Australian Bitcoin ETF was that it is a physically backed ETF, and that means that they have to have the Bitcoin in their reserve overall, and they have to buy the actual Bitcoin, which is what they're trying to get through in the US as well, but it is being more difficult due to the US regulators. However, this is an extremely good positive step because it sets benchmarks from other countries, and it means that it's more likely in the future that a US will want to adopt this to make sure that they do not get left behind. Also, as mentioned at the beginning of this video, the US is also just about to approve and are waiting for the signature of President Biden, the US infrastructure deal. And as part of that deal, there is a crypto component in there, which states that people are going to have to pay more in taxes. So it'd be interesting to see what effect that might have overall on the market when it's signed. But there is such a lot of bullish activity at the moment in crypto. I'm not expecting it to make a major difference because I think that this had already been baked into the price, as this has been discussed for several months. We've also seen some really good movement overall in altcoins, and we've seen a big rise this week in Ethereum and also Binance Coin. And this has been extremely good for our portfolio overall, as they are our second and third biggest holding in our portfolio. And Ethereum has continued to make all-time highs, as there is a big craze at the moment around NFTs and smart contracts, and also DeFi. And it's going really from strength to strength, and I'm expecting a big surge in Ethereum for the final part of 2021. And also there's lots of positive developments that I've been talking about over the last couple of months in the Binance coin, and a lot of this is to do with the developments in the Binance Smart Chain, and also the developers are trying to make the Binance currency more deflationary, and also every quarter they are doing a rather large BNB burn, and this is very good overall for the price of BNB. And also what we will see as we go more into an altcoin season, coins which are exchange coins such as BNB are going to do really well because they have added utility, because you are incentivized to use the BNB token because you get a discount overall on fees. So I'm expecting between the Binance Smart Chain and also the Binance Exchange that BNB is going to do really well over the next couple of months and is going to be a major part of our portfolio. So as I've been mentioning recently, the next couple of weeks we will be seeing the Polkadot auctions, and what that does is that allows people to be able to bind the native Polkadot token and be able to vote on their favorite projects in order to get a place in a parachain. And this is really good overall for the native Polkadot token because people will lock up their tokens, and there's going to be a supply constraint, and there's going to be a lot less selling pressure, and people are going to be buying Polkadot tokens in order to be able to vote on which projects get the parachains. So I think we're going to see a nice little spike up in the Polkadot price over the next week or so. I've already sold 50% of my position in order to be on the safe side, and I will start to scale out the other 50% of the position the closer that we get to that parachain auction. However, I do expect Polkadot still to do well in the long term. I've also continued to trim my crypto positions as per my strategy as the prices of crypto go up, and also as we get later in the crypto cycle overall. And I've been trimming this week both my Ethereum positions and my Binance coin positions. And the reason why I'm doing that, and I've mentioned that all to you in the past, that the further that you get in the crypto cycle and the higher the prices go, the more risk there is. And although I expect Bitcoin and other cryptocurrencies to do extremely well over the next couple of months, and as I've mentioned many times, I expect that Q4 high growth in terms of crypto. It was also important to take profits off the table. And I've been comparing this a lot to flying a plane, because I think it's important not to only be able to fly the plane when it's in midair and everything is going extremely well. It's important to know not only how to take off and how to fly the plane, but also how to land the plane eventually. And what pilots do is they do land the plane very gradually, and they start to prepare for that landing. It doesn't mean that it's going to happen in the very near future, but I will continue to trim those positions as the prices go up, and I will diversify into other assets. And I think that this is going to give our portfolio a lot of robustness, while also leaving us room for further growth and for further takeoff. Thank you very much for listening to my video today. And as usual, if you have any questions, then please don't hesitate to let me know. For all my new copyers and my existing loyal copyers, then as you will know, it is my mission to be as approachable investor as possible. So don't hesitate to get in touch with me. And also, please join our community group on Discord. I will leave an invitation link below. Thanks very much and have a great week ahead.